My first, as a stepping question, I will be asking you, how do you describe the present condition of the Islamic financial service industry? I mean, how do you feel it's growing, or as if it's struggling? And from
I think it is basically a growth industry.
Yeah.
So I mean, Islamic banks have been growing faster than the conventional banks. The exact numbers, obviously, I don't have right now. But Islamic banks, if you look at the whole industry, we are growing faster than the conventional industry. But the main challenge that we face is because we are part of still the banking industry itself is in a phase of consolidation and shrinkage. So there is there's a lot of pressure on cost. If you understand, banking in general works on net profit margins. So when the rates are low, as they are right now, we are in a low rate environment for the past, let's say, almost a decade after the global financial crisis. Low rates basically really hinder the banks, because obviously the lower the rates are, the lower your net profit margin is. For a conventional bank, the term that you use is net interest margin. For a Islamic bank, the term that you use is net profit margin. So low rates have a depressing effect on bank income anyway. So Islamic banks, the challenge with Islamic banks generally are newer compared to the conventional banks. Like they might be 10 years, their vintage might be 10 years, 20 years. They're not going to be 200-year-old institutions like some of the major multinational banks out there. Even local banks in different countries usually have vintage of 50 years, 60 years now. Islamic banks, you will see vintage is going to be like 25, 30 maximum. This is going to be a vintage of the bank. So the smaller the bank, the more challenge it has, because banks work on a network effect. The bigger your network is, the more customer base you are, the more you can leverage your fixed investments. Now, in that environment, Islamic banks will struggle. And Islamic banks also have another challenge, is that there is a lot of added documentation and a lot of added transactions that Islamic banks have to perform, because Islamic finance is based on the concept of Sharia principles, and usually there is an actual commodity or an actual asset on the back of every transaction. So it's not interest based, it's asset based. So in those cases, you have to do the actual transactions. So you have to do a lot of other transactions that conventional banks don't have to, and then you're taking a lot more risk, and you have to adhere to the Sharia principles. And you cannot charge unnecessary penalties, you cannot charge obnoxious rates, you cannot charge interest on interest, stuff like that, which is there in conventional banks. So you are actually, that is something that you don't have. So you're more ethical, you're more Islamic, but then obviously there is a cost to that. In that environment, our cost basis is higher, but then we compete in the market with conventional banks are there. So we work in the same market, so we can't charge really much higher than conventional bank, although our cost is higher. The cost of our products is higher. Our products are better if you look at the modality of the product for customers compared to a conventional product. But even then, we can't charge a higher price. So our margins are always going to be lower, unless the customers really see that this is something which is better than a conventional bank. But unfortunately, customers compare, the way they compare, they look at cost, they go with the rates. I mean, the comparison is like they consider it the same. So they will compare you, and they will basically put you in the same category as a conventional bank, and obviously their cost is not going to be the same as your cost. So we have two challenges. We have a challenge of an added cost of doing business. Then we have another challenge that our asset base or our customer base is usually smaller. You can take this across like most of the markets where Islamic banks are minority compared to some markets where obviously all the banks are Islamic. We exclude those, but in the markets where Islamic banks are not the major banks, which is the most of the markets in the world, you will see Islamic banks are, a smaller segment of the market. There we have the same challenges. And I think in our market, UAE, we have the same challenge.
Thank you. So now, moving forward, how does your bank, perceive cross-selling?
My bank, actually the cross-selling will be pretty much the benefits and the reasons to cross-sell are pretty much the same as they are with the conventional banks. So if you look at the reasons why conventional banks are looking at cross-selling, Islamic banks are looking at the cross-selling, because exactly the same reasons. Because the main crux is that we want to be the main bank, and we want to provide most of the financial services that a customer needs. The idea is that it's not about just giving the customer financing, or that can be any kind of financing. It's about meeting all his financial needs. So every bank out there, be it Islamic, be it conventional, wants to be A. There are two objectives for most of the smart banks. Is A, we want to be your main bank, and once we are your main bank, or we are in that stage that we are starting to lend you money for financing your projects, we would want your other businesses. So we would want all your other businesses. We would want your cash management business. We would want your treasury business. We would want your insurance business. We would want your let's say medical insurance business. We would want your transaction business. We would want your payroll. We would want your employee accounts. So we want your investments. So we want all of your financial services should come to us. The reason for that is that it's easier for you because you have a unified bank, and B, for us, we want to capture as much of the wallet share of the businesses.
True.
Because you just don't want to be in one category right now, because what has happened is that, because as I mentioned, because of the low rates, traditionally the main forte of banks was, this is what people used to say. This is what we've heard. Actually, I've never actually come across this in my career.
Yeah.
But you lend at a higher rate, you borrow at a lower rate, and you relax. You don't take any risk. That's not the case. So, though that margin, that profit margin for banks is very low. Banks need to focus on other avenues of income, particularly
maybe like fee based, and
it's mostly fee based. So
Yeah.
you want to have fee income. So you want to have income. You don't want to have profit or interest. You want to have income from providing financial services.
Yes.
This is the focus, and this exactly every bank should focus. Every bank, be it Islamic, be it conventional, should focus on this.
Okay, so I think you have already answered me the question that I was supposed to ask you. Please explain why cross-selling is used at your. But I think you have given me a fair amount of explanation there. So, do you think cross-selling is same or different in Islamic financial services industry as compared to the conventional? You have answered me that, but if you can just
the objective is the same for the bank, but obviously the challenge now is that in Islamic bank you might not have all the same products. So there are a lot of limitations, because let's say that a customer has trade requirements, but he trades in a country where all the other banks, all the banks in that country are conventional, or they don't accept Islamic trade documents. Maybe that's a challenge.
Sorry about
so
this.
you have this fine.
Yeah.
So you do have the product, but it might not be as per the standard that he needs, because trade finance has been around for a very long time. But Islamic trade finance is obviously different.
Yeah.
So there are limitations. Talk about treasury products. Treasury products we will not have all the same treasury products as a conventional bank has. There will be a subset. We will not have very exotic, very very highly leveraged, or very the term we use is exotic. We will not have exotic products which can carry a lot of risk or link to a lot of different things in a Islamic bank, because obviously it's very difficult to get those products. You will have a very small subset of conventional products when it comes to, even when you look at insurance. For insurance providers, the takaful providers, they might not be giving all the kind of insurance that is available conventionally. For treasury, you will not have all the products. For trade, you will not have all the products that are there. So one challenge is that you will not have all the products. You will not have a counterpart for every product that a conventional bank has. Because obviously conventional banking has been around for hundreds of years.
Yeah.
And
but that's only from the business side. Do you think there are any other differences, not only from the business side, from other, say, Sharia side, or
this is
the structure, infrastructure?
I don't think the challenge is infrastructure, or obviously Sharia limits what you can do. You can't do something which takes a normal risk. Sharia will limit stuff that will conventionally be allowed in conventional banking. Some of the stuff Sharia will not accept in Islamic bank. So Islamic bank has a Sharia board, and the Sharia board governs what products they do. So there is fragmentation among Islamic banks. So you might have Islamic bank A in country A saying that this product we do it this way. You may have another Islamic bank in the same country or another country which does the product different way, the way it's structured in Sharia, and those two products might not have the same terms and conditions, and they probably can't even trade with each other as Islamic banks. because they will say that this is the way I do this product, this is the way I do this product.
Standardization is
There's no
not there.
standard. Standardization is a big challenge.
Yeah.
So every Islamic bank has its own Sharia board. They have their own products. They have their own documentations. Standardization is a big challenge. Whereas if you go to a conventional bank, if you look at even a treasury product, most of the treasury products are, the main terms, the language is the same. So they will work under something called ISDA. Master documentation, and all of the banks across the globe,
They'll use the same.
They'll use the master
term.
documentation.
Yeah.
They'll use the same terms. So, for example, for me to trade with another bank, a new instrument in a conventional bank is going to be nothing at all. I don't have to work on any documentation. The only thing will be negotiating the pricing on the or some economic terms. It will not be a document of concept issue. It will be those issues.
Okay.
So, standardization among Islamic banks poses this challenge. So even two Islamic banks in different countries who want to do trade finance transactions, who want to do treasury transactions might not be able to do it because of this standardization issue. They might be negotiating those agreements for years. So this is one of the challenges. So Islamic banking has standardization is a big issue.
Yeah. So.
Yeah.
So coming on the practical side now of cross-selling, how does your firm engage or the bank engages in cross-selling? How do you do cross-selling from a practical point of view?
From a practical point of view, cross-selling is basically a bank-wide exercise. The different departments who are there have product partners, work with product partners with the relationship managers of a particular segment. They go with the relationship manager and try to pitch all the products that they have in their respective departments. So the same idea as I said that you try to actually sell most of the products that you have in the segment. So we work together as a team. We are responsible for each other's success. So we work to get the maximum out of a particular customer or customer relationship as much as possible. So they might be focusing on, let's say, financing, trade, etc. Trade will focus on trade, treasury will focus on treasury, insurance with a couple will focus on insurance with a couple, cash management will focus on cash management, payroll is on payroll. Wealth management will focus on, let's say, the owners or senior management of the business, to sell them those products.
Yeah.
So you'll try to sell anything from a credit card to a treasury product to a loan, everything you want to sell together.
So for that, you need a proper segmentation, right? Your customer base,
customer base is segmented. Customer base is segmented across the bank. So customer base segments are there.
Yeah.
There are segments in personal banking, private banking. There are segments even in the corporate banking. There will be small customers, medium customers, mid customers, large customers, global corporates, GREs, or quasi-sovereign entities. So segmentation is something that you will see in conventional banks, you will see in Islamic banks.
But yeah, for that, so is your bank like really deep into data mining engineering? They do like
not.
But then how is it like for segmentation, like for identifying the best cross-sell targets? Is it all like, I'll rephrase what I want to ask you. Is it like on a very rudimentary level, and is it on a very basic Excel level that you're doing segmentation, or is it that you're properly going into the database and doing the data mining and identifying the patterns and the behaviors of the customer, like the buying and behaviors, the spending behaviors, everything to like from their demographics to their... So, yeah.
Can you give me 1 second? Can you hold on? I'll answer the question because I have this call. I just need to take it from a customer.
Yeah.
Just give me. I'll just be right.
Yeah.
Your question was basically in the end about data mining and segmentation, right? So the way it works is, see, that is like obviously the future. So a lot of people think that the bank is basically a big data company, and this is actually what it is. But the problem is right now is different banks are at a different level of sophistication. So you've got the US banks, they're very sophisticated. Then you've got like the European banks or the old banks, they are also very sophisticated. They have these MISs, they have the BI people who can dig out the data and look at this. But the way most banks, like in the market that we are in, work is that we actually have already pre-built the segments, okay, and then we try to onboard the clients into those segments. So if you look at the corporate banking side and not look at the consumer banking side, because see, I work for corporate banking, so my main experience is all corporate banking. So I'll speak about corporate banking, but same applies to consumer as well. So when you are actually onboarding a client, even in consumer or corporate banking, you have some criteria. So you have a criteria of a salary, you have a criteria of a net worth, okay? So they will onboard those clients based on that criteria. So that will be a range. This salary to this salary, you're this client. This salary to this salary, you're this client.
Yeah.